Dirty dealings, corporate battles, consumer woes. This is Evening 5. While negotiations on the supervision of oil and gas trading in Sarawak are still ongoing, Petronas President Tan Sri Tengku Muhammad Taufik cautioned that dividends paid to the government may be affected if the new arrangement results in a drop in the national oil firm's revenue. Sarawak state-owned Petroleum Sarawak, or Petros, in July signed gas sale agreements with Sarawak Petchem and Sarawak Energy, marking a step forward for Petros to take over the role of sole gas aggregator from Petronas to buy and sell all natural gas in the state. However, negotiations are still ongoing between the federal government, Sarawak state government, Petros and Petronas to execute the details of the new arrangement. Although he admitted that negotiations have been difficult, Taufik denied that there have been clashes between Petronas and Petros, maintaining that discussions have been undertaken professionally between all parties. He was talking to reporters at Petronas' mid-year financial briefing, where the national oil company reported that its profit after tax for the first half fell 19.4% to 32.4 billion from 40.2 billion previously, dragged by its gas segment. This was despite a slight increase in revenue of 1.6% to 171.7 billion from 169 billion in the first half of FY 2023, mainly due to the impact from foreign exchange, which was partially offset by lower average realized prices, especially for LNG in tandem with declining benchmark prices. Meanwhile, Petronas' downstream segment reported PAT of 832 million, less than half of the 1.92 billion recorded in the first half of FY 2023, mainly due to the impact of deconsolidation of subsidiaries, partially offset by higher petroleum product margins. Petronas' upstream segment reported a year-on-year increase, partially offsetting the fall in PAT in its gas and downstream segments. Besides that, in the first half, Petronas achieved first hydrocarbon production for 5 projects in Malaysia and 2 in South Sudan. Final investment decisions for 12 projects, amounting to 7 in Malaysia and 5 outside Malaysia, as well as 1 exploration discovery in Suriname. Looking ahead, Petronas says that it is committed to preserving value through cost rationalization and remains progressive in monetizing upstream resources while advancing efforts in the renewable energy space. Bank Negara on Thursday left the benchmark interest rate unchanged as widely expected, drawing comfort from sustained economic expansion and benign inflation. The overnight policy rate was maintained at 3% following the Monetary Policy Committee's 2-day meeting, according to BNM. A Bloomberg survey of economists unanimously called for the central bank to stand pat in the 4th of the 6 reviews scheduled for 2024. BNM said that the current OPR level, the monetary policy stance, remains supportive of the economy and is consistent with the current assessment of inflation and growth prospects. Malaysia's economic growth accelerated faster than expected, expanding 5.9% year-on-year in the second quarter, thanks to stronger household spending, business investments, and exports. The economy may expand 4 to 5% this year, according to government forecasts. BNM has kept OPR unchanged for more than a year now since it was last raised in May 2023 by 25 BPS. The central bank said the latest indicators point towards sustained strength in economic activity driven by resilient domestic expenditure and higher export activity. BNM added that going forward, exports are expected to be further lifted by the global tech upcycle as well as continued strength in non-electronic goods. Tourist spending is expected to continue to increase, while employment and wage growth as well as policy measures are still supportive of household spending. Investment activity would be sustained by ongoing multi-year projects in both the private and public sectors. Both headline and core inflation, meanwhile, averaged 1.8% in the first half due to contained spillovers from the floating of diesel prices amid mitigation and enforcement measures to minimize the cost impact on businesses. For the year as a whole, average headline and core inflation are expected to remain within the earlier projected ranges and are unlikely to exceed 3%, according to BNM. Headline inflation is projected to average 2 to 3.5%, while core inflation will come in at 2 to 3%, 3% for the year. Still, the inflation outlook is highly dependent on the implementation of further domestic policy measures, flagging upside risk from the impact of subsidies and price control adjustments to broader prices, as well as global commodity prices and financial market developments. On the ringgit, the central bank said Malaysia's positive economic prospects, domestic structural reforms, and ongoing initiatives to encourage flows will continue to provide enduring support to the currency. PPB Group is optimistic about its second half outlook, saying that the strengthening of the ringgit against the US dollar could lead to higher consumer spending and reduced raw material cost. The four key business segments under PPB are grains and agribusiness, film exhibition and distribution, consumer products and property. Group Managing Director Lim Soon Huat said the stronger ringgit is favourable to the conglomerate's procurement of raw materials, which are mostly imported. But he added that a stable currency environment rather than big swings is more desirable for better planning. As for the group's film division, PPB hopes to benefit from several blockbuster Hollywood titles in the second half. PPB said its property division is completing the acquisition of 3.91 acres of land in Kuala Damansara for the development of a low-density condominium project. PPB said its 18.8% owned associate Wilmar International will continue to contribute substantially to its overall profitability. When asked about the cooking oil contamination scandal in China, Lim assured that it has no impact on Wilmar given the group's established track record in the country. Going forward, PPB said it will prioritize strengthening supply chain management and operational efficiency to mitigate potential disruptions arising from climate change, geopolitical conflicts, and economic and financial market volatility. For the next 5 years, the group has earmarked a total of 787 million for capital expenditures. This includes 392 million for investments in flour mills in China and the construction of silo and maize facility in Malaysia, 296 million for 7 new cinemas in Malaysia and the upgrading of existing cinemas, 67 million for system upgrades and automation for the consumer products division, and 32 million for the refurbishment of Cheras Leisure Mall. The Malaysia Competition Commission said on Thursday that it is penalising 7 privately held companies for alleged involvement in a cartel to bid for 4 defence tenders worth 20 million ringgit. The combined fine was 446,092.95 against 7 firms: Agenda Exclusive, Star Apex Enterprise, Nekat Wajah Resources, Spectron, Technocrat Makmur Enterprise, Prospectrum and NK Panorama Enterprise, according to a statement from the MyCC. MyCC CEO Iskandar Ismail said that bid rigging cartels have long threatened the integrity of public procurement, draining valuable public resources meant for the benefit of the nation and Rakyat. Agenda Exclusive was slapped with the highest penalty at 272,129.52, followed by Star Apex at 109,701.11. All 7 companies have also been instructed to enroll in a competition compliance program approved by MyCC. Investigations revealed that 2 cartel groups were involved in bid rigging, according to Iskandar. The first group, comprising Agenda Exclusive, Star Apex, Nekat Wajah, Spectron and Technocrat Makmur, operated by having Agenda Exclusive set the base price, while the others submitted higher bids. The second cartel group, involving Prospectrum and NK Panorama, used a similar modus operandi. Iskandar emphasised that MyCC's investigations focused on the companies involved, not the Ministry of Defence, which was manipulated by the cartels. MyCC is currently investigating 13 suspected bid rigging cartels involving 561 enterprises in tenders worth 2.37 billion ringgit and is assessing complaints concerning 463 enterprises in tenders worth 9.27 billion ringgit. O&G services company Steelhawk made a red-hot debut on the ACE market of Bursa Malaysia with a 130% gain on Thursday. Steelhawk closed at 34.5 cent versus the initial public offering price of 15 cent per share, giving it a market capitalization of 169.05 million ringgit. Its share price doubled at the open to 30 cent, with 6.49 million shares changing hands. The counter reached an intraday high of 38.5 cent, leading the most active stocks on the bourse. Steelhawk is the first company that underwent the new market transfer framework for the lead market to the ACE market. Steelhawk Deputy Chairman and Executive Director Dato' Sharman K. Michael expects bright prospects underpinned by Petronas' annual capital expenditure to ensure the long-term growth of Malaysia's ONG production. While Petronas remains as Steelhawk's primary client, the company has diversified its customer base since 2021 and is exploring opportunities in the green energy sector. Steelhawk has earmarked 51% of its 13.5 million proceeds from its IPO for the construction of the proposed Telok Kalong Facility 2 in Terengganu, where it recently secured a scaffolding services contract from Petronas Chemicals Group.